Good afternoon. I am looking at the bond market option volatility index. And today, if you look up here, we had a nice, strong push. Well, actually, let me see what day this was. Yeah. All right. Um, so, a new week starting now, but we had this nice, strong candle come up in here, right? And this was last Monday. All right. And this is this week. So we had a little bit of rejection. And we got this new calendar forming for this week. Now we look at this to help us gauge and see, basically what the bond markets are doing. It can give you a tip of what the equities may do next. All right, so if you look back here, this is March 2020. All right, we had a nice little push up, and then of course it collapsed down. But if you look down here, this is the S&P 500. So what do you notice? You notice some form of an inverse, right? So you see with this volatility index, all right, we have, like I said, nice little push, and then of course we had this sharp decline. But we also can go back into the other crisis that we had in 2008, and you'll see similar movements. Where we at? All right, so if we look up here, right, we had a nice strong push to get up here, and then what happened? We had a nice steady drop, right? Let's fast forward. We have this now, and now we're here in real time. Are we going to see these drops? Are we going to get a drop? And if we do get a drop, I don't expect it to be catastrophic as far as like 2020, but steep enough. And what we can do is we can go through, we can do some measurements of some of these drops so we can see exactly what we're looking at to get a ballpark. See that was 14%. 20. In the worst condition possible, that was 35%. And we're already dropped already down to this far. So at this point, we're at 27%. So even if we do get some drop, come down, right? And if let's say we do another 35%, at most we may can see this. And this is just the S&P. So it's not that bad. Let's see what happened in 2008, how much we dropped. And yeah, this was worse. So this is 58. Now we got to consider this. All right, so let's look at this. We got 58 right here. And where was this one? So this is the .com bubble. All right, so we need to look at that one as well too. I don't have enough. I don't have data to go up here and do it on this one, but I could probably look at another VIX to find that out. All right, 50%. All right, so these are what we really need to look at. We need to look at this one, this the .com, and then the banking crisis or the real estate crisis. All right, those two mean much more and they're more relatable. Um, with the .com being that bubble, of course, we already know crypto has already went through a bubble for the most part. But we got some other asset classes out there that too are in bubble territory, such as real estate. With a lot of these layoffs coming, that definitely going to affect the real estate market as well too. People are starting to default on their mortgages. Okay, but what I want you to look at too is this type of pattern that's showing up. This type of pattern right here. So we're sort of stair stepping down, right? We gotta let's do this. All right, we got a low, lower high, lower low, lower high, and then lower low. All right, low, lower high, lower low, lower high. Oh, let's move this out of the way. Do this one more time. Let's do it from here. Low, lower high, lower low, lower high, lower low, lower high, and lower low. Right. So what we have here, low, uh-oh, low, lower high, lower low, lower high, lower low, lower high, and could we see that we could get a lower low than this level right here? Then that would put us right in line of the 50 percentile. So let's do this. Here's the 50%. So within this area, what we could see a potential, if it follows, we could see a potential double bottom. So S&P could drop to that level. Um, let's go on the chart and see if this has ever happened. Let's see if there are any double bottoms on here. Let's put the indicator on and see if it populated. Sometimes it's not going to catch it. Some people may consider this one. This could be what we call a zigzag double bottom. It's what I call it zigzag. Yeah, I don't see anything. Oh, I'm going all the way back to 79 now, so yes. In fact, let me see what this is. This is 1987. Let's see what this drop look like. So it's 35%. 20. But regardless, with these drops, there have been just plenty of opportunities for market to rebound. Give it breathing room. So it's a nice little 21. Of course, we know this was over 50 something. This is 50. Those are two we really want to look at because with everything that's happening in the world right now, especially coming out of this, the Feds say the market right here. So, I mean, it's only so much they can do. So definitely price could come back, down to this area. Um, let's do this. See something. See. All right, so I measured from here up to here, and we did get a 61% of the field level retracement. All right, so that's pretty good. So what we're going to do now is that we're going to measure my Fibonacci retracement tool. We're going to measure it from that low that we had in March. We're going to take it up here to the high. All right. And we'll look here to 61%. We want to have this as a key area where price possibly could come back into. And if that happens, let's see what the percent drop would be for the stock market. So right at the edge, I put it at 38%. 45% and a 78% retracement level. So these targets, like I said, they could be revisited, um, but it doesn't have to be. But these are potential areas. Also, could do a downside extension. So this will be the next target based off this impulse down, and then this will be target number two. So it still falls within that range that we were talking about. So this is going to be interesting to see. It does provide opportunities for people to get some equities at a discount or whatnot. But yeah, but this was alarming. See that VIX move like that? It's crazy. And like I said, if you go back look, you know, you see, what happened afterwards. So hey, pay attention to that. Hey, this your boy E White. Hit like button, subscribe. I'm out.